Welcome back to XRP Update, everyone. Hope you're all having an awesome day. We have some absolute massive news to break down today. SWIFT just dropped a brand new cross-border payments framework, and they've rolled it out with over 50 of the biggest banks on the planet. We're talking heavy hitters like JPMorgan, HSBC, Citi, and BNP Paribas. Now, here's why the XRP community is stopping to look at this. A huge chunk of these exact banks already have deep ties, pilots, or infrastructure linked directly to the Ripple ecosystem. So when news like this breaks, it naturally begs the question, how long until Ripple's tech and the XRP Ledger become a permanent fixture in this new global framework? Look around. The financial world is moving incredibly fast toward tokenization, instant settlement, and digital assets. The puzzle pieces are clearly moving into place. Now, to be completely fair, there is zero official word linking XRP directly to this specific SWIFT announcement. But the timing, the players involved, the massive industry shift, it's creating a ton of well-deserved buzz in the crypto space. Today, we're going to untangle exactly what's happening, what it means for XRP, and why so many investors think the future of global finance is going to look radically different from what we're used to. But before we dive into the meat of it, I want to call out something pretty special. The XRP Ledger just celebrated its 14th birthday. That is a massive milestone in the crypto world. Think about it. Very few projects survive multiple brutal bear markets, endless regulatory battles, tech shifts, and constant competition, all while scaling up globally. And honestly, a huge part of that is due to the XRP community. You guys are easily some of the most passionate, dedicated people in all of crypto. Every single day, people from all over the world are in the comments discussing adoption, utility, and where this space is heading. Whether you've been holding XRP for years or you just bought your first bag last week, it's been a wild ride. Your support, your comments, and your engagement are what keep channels like this alive. So thank you. As the entire global financial system rewrites its playbook, it's pretty wild to think that we might be front row witnesses to one of the biggest technological shifts in modern history. The next few years are going to be fascinating. All right, let's get back to SWIFT because this deserves a closer look. This new framework is promising instant settlement, fixed fees, and end-to-end payment tracking across major global corridors. Now, if you've been following Ripple for more than 5 minutes, that should sound incredibly familiar. Speed, low cost, transparency, that's literally been Ripple's exact pitch since day one. The interesting part is that SWIFT has been quietly playing around with blockchain and interoperability for years. Why? Because traditional banks are under immense pressure to upgrade systems that were built decades ago. Businesses want their money instantly. Banks want to manage liquidity better. Customers want transparency, and regulators want visibility. The lines between traditional finance and crypto infrastructure are blurring. This doesn't mean XRP is automatically getting the crown, but it means the entire market is sprinting toward the exact problems XRP was built to solve. Look at the specific banks on the list. JPMorgan has been experimenting with blockchain for ages. HSBC is heavily expanding its digital asset wing. Citi is constantly testing tokenized deposits. When you see these financial giants constantly showing up to the same modernization sandbox, you can't help but connect the dots. Finance doesn't change overnight. It happens slowly, through quiet pilots, testing phases, and slow rollouts. What we're looking at today is a glimpse of a future where blockchain runs the pipes behind the scenes. Most regular people won't even realize it, but the way money moves tomorrow is going to look completely different. In fact, we recently saw a major cross-border pilot featuring Ripple alongside JPMorgan, Mastercard, and a few others. That transaction was a big deal because it proved that digital asset infrastructure can plug right into traditional banking networks to settle money across borders smoothly. These aren't just concepts anymore. These institutions are actively testing how this tech handles real-world volume. The debate isn't, can we tokenize things? The debate now is about scale, speed, compliance, and reliability. And that's exactly why XRP supporters are so optimistic. When volume goes through the roof, you need a ledger that is lightning fast and dirt cheap. Take HSBC's digital asset strategy as a prime example. They're sinking serious cash into tokenized assets, digital custody, and crypto financial products. Think about the scale here. We are talking about the largest institutions on Earth dedicating massive capital and engineering talent to blockchain integration. They aren't doing that for fun. They're doing it because they know where the puck is going. Citi is on the exact same wavelength. They're focused heavily on tokenization to fix settlement delays and liquidity issues. And the consensus among experts isn't that one blockchain will rule them all. Instead, we're heading toward a multi-chain future where different networks talk to each other seamlessly. That means interoperability is king. Ripple has spent years building for exactly that scenario, which is another reason long-term holders aren't sweating the short-term noise. Plus, as regulatory clarity finally starts to take shape in the US, a lot of people think the floodgates will open for more public partnerships. Institutional money is notoriously terrified of regulatory gray areas. Big banks want absolute certainty before they move trillions of dollars onto new tech. As the rules of the road get clearer, these massive organizations will have the green light to move faster. And remember, the reason we care so much about banks like JPMorgan, Citi, and HSBC comes down to one word: scale. These guys move trillions of dollars every single day. Even a 1% improvement in efficiency saves them billions. Shaving off settlement times frees up capital. Better transparency lowers risk. If the XRP Ledger can capture even a small slice of that global volume, the potential is mind-boggling. It's not just banks either. Mastercard is actively pushing into cross-border innovation. Seeing Ripple name-dropped alongside legacy payment giants shows that the future isn't about crypto replacing traditional finance. It's about collaboration. It's a hybrid model where blockchain upgrades the existing plumbing. And if you look at the tech itself, the XRP Ledger's consensus model is uniquely built for this. Unlike Bitcoin or Ethereum, it doesn't rely on mining or massive staking rewards. It uses a federated consensus model. For a massive bank, that means predictability. They don't have to worry about transaction front-running, wild fee spikes, or network manipulation. When you're handling billions in corporate or government funds, reliability is everything. On top of that, institutions love predictable supply metrics. The XRPL handles this beautifully with its transparent escrow system. Every month, a set amount of XRP is released, and whatever isn't used goes right back into lockup. Add in the fact that transaction fees are permanently burned, and you have a highly predictable, deflationary ecosystem that institutional risk managers appreciate. We're also seeing a major shift in how institutions buy in. With the explosion of digital asset ETPs, corporate treasury strategies, and institutional funds, big money can finally get exposure without the headaches of managing private keys. These players don't trade like retail. They have long investment horizons and focus entirely on long-term utility and infrastructure. And at the end of the day, utility is what wins. Look at the recent explosion of real-world asset tokenization and stablecoins on the XRP Ledger. Wall Street is convinced that everything, from bonds and real estate to money market funds, will eventually live on a blockchain. But you can't just tokenize an asset. You need the infrastructure to settle it. That's where XRP comes in. The introduction of RLUSD is a perfect example of this. Stablecoins are the glue holding digital finance together because they give you the speed of crypto without the price volatility. When you combine tokenized real-world assets, institutional-grade stablecoins, and major payment modernization, you get an environment where true on-chain utility can skyrocket. Look, the numbers don't lie. Industry projections show tokenized assets hitting trillions of dollars over the next decade. The lines between Wall Street and crypto are officially blurring. The companies building the foundation today are going to own the financial system of tomorrow. That's why these Swift pilots and Ripple infrastructure rumors keep everyone up at night. Even look at things like the DTCC's tokenization efforts and discussions around Ripple Prime. It all points to a massive overhaul of how ownership and value are settled globally. So let's bring it all together. No, Swift has not announced that XRP is running their new system, but the undeniable truth is that the global financial elite are sprinting toward tokenization, instant settlement, and blockchain infrastructure. The big banks are investing billions. Payment giants are expanding into crypto. Stablecoins are booming. The pieces are moving on the chessboard, and the conversation is getting serious. Whether XRP becomes the definitive global standard remains to be seen, but the trend is shouting right in our faces. Thank you so much for spending some time with me today on XRP Update. If you enjoyed this breakdown, do me a huge favor. Hit that subscribe button, leave a comment with your thoughts, and stay locked in, because the next major development in this ecosystem could be right around the corner. I'll see you in the next one.